I'm sure that 95% of the people that are going to watch this video have no idea that other types of candles other than the minute based even exist. So let's start right away. First of all, I'm going to split our candle types into three groups. The first one would be time, the second one would be volume, and the third one would be volatility. All this information are crucial for traders to know when they are doing their analysis, their hypothesis, and execution of trades in their trading platform. Time candles are usually measured in minutes, hours, or days. You are all familiar with this type of candles because all the retail trading platforms have these candles. This is no new information for you. But the problem is with time candles that you are not learning anything new that happens to the market. Whatever happens to the market, every time a minute passes or an hour passes, it will print a candle no matter what. For example, in Asian session that only few traders trade there and the market is not moving a lot, it will print the same amount of candles as in London session or US session. For example, if we say that the whole Asian session is 5 hours and we have hourly candles, then it will print exactly 5 candles no matter what. The same will happen with London and US session. For 5 hours, it will print 5 candles for each session. The problem here is that you are not learning any new information. All sessions are equal, even though London session and US session have higher volume and higher volatility. But you don't see this information with minute-based candles. Everything with minute-based candles looks the same. It's like someone is blindfolding you to new information. Do you see the problem with the time-based candles? You don't get any new information and you don't see the action of the market and how it reflects with your candles. Candles are supposed to be informative for traders to learn some new information and take action to the market that they are trading. And with this type of candles, you actually don't learn anything new. Everything looks equal. Time candles on platforms look like this. You can see here the highs and the lows of the candle. You can see the movement and the patterns for those who are using pattern related candles, which I don't support at all. Actually, that's not very helpful for professional traders. The second group that we are going to discuss are volume candles. Volume bar type candles, as the name suggests, are based on volume. This is very helpful to know because, as previously mentioned, let's say the Asia session lasts for 5 hours, okay? Because the volume there of traders trading is very, very low, the whole Asian session could only print 3 candles. But the new information comes in when we are in London session and US sessions that volume is high, skyrocket high. There you can see a lot of volume candles printing on London and US session because a lot of traders trade those sessions and it's highly volatile with huge volume that moves the market. Actually, US and UK sessions are actually moving the markets. So it's only fair that the volume candles are way more in those sessions than in any other sessions of the day. So do you see my point here? You get a lot of new information here. You can see the time-based candles for this period, and now you can see the same time but with volume-based candles from this time to this time. It's completely different. Even the patterns of these candles are different. It's because the one is based on time and the other one is based on volume. volume is more reliable to see the trend of the market that you are trading. Besides, don't forget that volume is one of the things that moves the market always. Time does not move the market. It's volume that moves the market, because the more powerful traders are using higher volume to move the market up or down. Essentially, you are looking the power of buyers and sellers and who is stronger on that day with the volume. With time, you don't see, no matter what happens, every minute, depending on which time frame you choose, the candle will print, so you don't get something out of it. In futures platforms, volume-based candles are measured with contracts, and on retail trading platforms, the volume bars are measured with lot size. Because I know the audience is mostly retail traders that are willing to learn, I'm going to relate an example with volume-based candles using lot size. For example, let's say we set a volume-based bar to 100 lots. This volume bar will print only when 100 lots occur. For example, even if 5 minutes are passing, or 1 hour, or 10 hours, and 100 lots do not occur in that asset, only one candle will be printing. But if you take the time-based candles, every minute that passes, a new candle will start printing. For example, for 10 hours, it will print 10 candles. But in volume-based candles, if in those 10 hours the 100 lots do not occur, only one candle will start printing. Do you see the difference between 10 candles and one volume candle? This means that the market is not moving, and you can see it with the representation of the one candle. But if you see on the time-based candle that there are 10 candles, you are going to start hypothesizing and thinking that the market moves when the market it doesn't. So you need to be careful and start using volume candles. Now, volatility measures how much and how quickly the asset that you are trading moves. This is very important information because it can influence the profit and the level of risk you are taking with your daily trading. So this is something very important that you need to know and have in your charts when you trade. Footprint is the best representation for volatility. You can see several volatility candles there. Volatility is best used with footprint tool. If you don't know what that is, go to this video where I introduce you briefly to what the footprint tool is. Anyway, volatility is measured with Renko and Rage candles. At least that's what I prefer. Volatility in future is measured with ticks, but with retail platforms is measured with pips. There are so many candle types for volatility, guys, if you search Google, but I found these two to work the best for me. Besides, there is no magic in them. Use them to help you read the market better. There is no magic trick. Like many retailers out there are saying that use the 8 period for moving average is the best setting on earth, you will earn money. No, settings can change throughout the year. It's your job as a trader to learn to adjust. Now I'm going to introduce you to the range candle. Here is a range candle. Now you can see clearly that is different with the time based, and here is the volatility based candles. You can see that those two are different. Now we said before that volatility measures how much it moves. You will tell me that also time candles measure how much it moves from highs and lows with the time candles. But I'm gonna stop you there because, for example, range candle, if you set it up to 100 pips, it will not change candle until the 100 pips are fulfilled, meaning that the time candles will have a batch of minute candles to fulfill the 5 hours, but the range candle will only change if the 100 pips move fulfilled. They are referencing the lows and highs, but they only change if a certain number of pips or ticks are fulfilled. Is a crucial information for your trading. You will adjust the risk management and the risk reward ratio you want for the day if you actually know if the market that you are trading is volatile for the day. And a little bit of spice and secret to this, I'm gonna tell you to check up the volatility index to see how much is for the day. If the volatility index is lower than 15 points, then it's a low volatility day. If it's between 15 and 25, it's a moderate and usual day volatility. If it's greater than 25 points or 40 points, it means that it's huge, so you need to avoid trading all that day, or you need to lower your lot sizing or contract size for the day, because there is so much risk involved, but also there are higher rewards. So I would suggest you stay out of trading. Now, back to our topic. We said before that the range candle reference the lows and highs, but the Renko candle only reference the close of the previous candle wherever the close is. But this is not the significant difference that I've been dying to tell you. The main difference that I really like about Renko candle is that, come closer, it only prints a new candle to the opposite direction if it's double the amount of pips or tick size. Do you understand now? For example, if we set the Renko candle to 100 pips, then it only prints to the opposite direction if it's 200 pips. This is very important because, for example, if we go down, it only prints candles down if it's 100 pips. But to move to the opposite direction, which is up, it needs a candle that it's 200 pips. Then continue up, again 100 pips, 100 pips, and it will reverse again if it's double the amount. So again 200 pips. Do you understand my point here? And the main difference between Renko candles and range candles. Also, another thing that is very important to know is that when you see a candle to the opposite direction, you have a strong case that you will see a reversal on the market trend. Is not always, but most of the times is like that. So you get a new information only with rearranging your candle types. So you can execute and perform better only from this, from knowing other types of candles. So this is one way to improve as a trader, by learning new things and using those things to get new information about the market that you are trading to start being profitable. These are the basics that are gonna elevate your trading game. So pay attention, guys. Now we will see how the Renko and range candles are. Now we can see the range candles, and here we can see the Renko candles. Here we will try to find a reversal of Renko candles to see if we have a case that it reverses direction so that we can trade on them. Let's see. Here is one. We find one over here. So do you see there is a potential of a reverse strategy using only the candles? And also to point out, do you see that there is actually difference on the movements of range candles and Renko candles? Now I will compare them with the time candles. The time candles also reference highs and lows. Here is the range candle. There is a difference, even though they are referencing the same thing. The one is using time and the other one is using volatility. So they are completely different. But range candles are more similar with Renko candles, like this movement here. Do you see here there is a movement, and here there is approximately the same move. So now we said that all the candles are completely different because they are measuring a different thing. Now do you see why time candles don't give any new information? Only the other type of candles are giving you very good information to know and analyze for your daily trades. But the only use that I can think of for time trading is on the daily chart if you want to see the overall market sentiment. That's the only use that I have for time or based minute candles. If you are trying to use time candles for a strategy, you will absolutely fail. And I'm telling you right now to change your way of thinking about trading. It's about time, guys. I showed you with proof all the candlestick options you have as a trader to make the next step on your trading journey. So what are you waiting for? As always, if you have any questions, DM me on Instagram and subscribe for more.